GM. GM. Slightly delayed daily levels, as will trade of the day be. I'm traveling. But let's go. Better late than never, yeah? So today is Thursday, the 4th of January. Let's take a look. So, yesterday we had the fucking one man's opinion crashing the market episode. And here's the aftermath. So, if you take out the... There you go. Take out the wicks. Bitcoin, perfectly strong. The true demand was the test. Right? The wicks can go crazy when there's mass liquidations. The true demand... Excuse me for that. True demand was shown on the pullback. And where it closed. There is still demand waiting to buy Bitcoin at higher lows, higher lows, higher lows, higher lows, all the way until the ETF approval, which is coming unless there's some major surprise that nobody has foreseen yet. Because basically what happened yesterday is a guy wrote a fucking FUD piece, and no doubt he was short, and that piece got unusual amounts of traction. So here's the thing. Short sellers and long bulls, people write their thesis all the time. I think this is going up because of this reason. I think this is going down because of that reason. And they post them on their website or on their blog or on Substack or whatever. And it gets no attention. You are being manipulated. Right? Don't ask yourself, why did that guy write the report? Ask yourself, why did everybody retweet it as if it was true? And why did they use specific phrasing to make it sound as if it was fact? And then why did they have, big red Bitcoin crashing colors on the images they were showing with it? To an extent, that was coordinated. So, and this is the game. I say this over and over again. The market. I know people sort of in crypto are very entitled, right? I think everybody thinks that just by getting in, you should make money, right? And if you do the right things, you absolutely can. But it doesn't give you have nobody has a right to make money. It is a competition at the end of the day. Now, when we get a bull market, you have a period of many months, even a year or more, where everybody gets richer and richer and richer on paper because they buy, they don't sell, it goes up. They buy more, they don't sell, it goes up. And that's all well and good until it comes time for profit taking. Then it becomes a rush for the exits, and the exits are much smaller than the entrance. That's what you need to remember. The entrance into crypto is like a fucking tunnel. It's like a massive underground tunnel through a mountain in the Alps. That's the entrance to crypto. All welcome. Come on in. Onboard your money really easily. There you go. We'll give you some tokens. Off you go. Gamble in the casino. The exit's like a fire door in the corner of the room. Imagine a room with 10,000 people in it, a concert or something. And there's one door. There's one emergency exit. One fire door. And then boom, fire. Pandemonium ensues. That's what the market's like. But that's not here yet. That's a long way away. But the point is, don't be surprised when people will do literally anything to manipulate the market in their favor. But also understand that that is a short-term temporary thing. If you look at this, by the way, this is how most TradFi look at all assets. They have a Bloomberg terminal and they look at the line charts. They don't look at candlestick charts. Candlestick charts are only for technical traders, right? And when you just look at that, if you're not on Twitter and you're a TradFi manager and you bought a bunch of Bitcoin and you wake up and you're, why is Bitcoin? Bitcoin's back down to 43. I think I'll buy some more. Still looks strong. Still going up. Higher highs, higher lows. But just think of the emotions yesterday. I had to do an emergency stream because there was so much confusion around what had happened. If you are new and were confused by that yesterday, two things. Reduce leverage to zero. Because that was not a big move. That was nothing compared to a proper crash. And really good sign, really good example of Bitcoin's demand that's sitting there. I mean, we dumped from what, 46 at the very peak? 12%, and people are losing their minds. Can you imagine a Bitcoin 20%? But anyway, on to today. This is super, hyper, mega bullish. I'm so fucking bullish, I can't speak. And after idiots getting washed out yesterday, I'm even more bullish. Because usually if there's genuine weakness here, you're going to see the second day have follow through. So far, we're having a very strong second day. When I say strong, I don't mean we're going to new highs or anything, but we're consolidating nicely. This is price building a really nice base in here. This is not distribution in terms of price action. This is a really good base. And one of the key giveaways is obviously you have your massive liquidation flush, right? Then several hours later, you have another attempt to go down. Big long wick, right down, sweeps that low. Demand has already migrated from 40.3 up to 41.8. I'm long, right? I'm long from an average of 41.2. Bought some at 42, bought some at about 40.5. I'm long from there. Yes, sir. I have such high conviction that this is going to new highs. Everything I've seen since then tells me the exact same. Now, we're also in this mini range here. I'm not saying that price can't fucking smash around in here for a bit. I don't think it will. I'm not saying it can't do that. It doesn't become a concern until we start closing candles below yesterday's wick. This wick. If price just starts to trade down into this area, that's not good. Because remember, we're late in the ETF game. For price to chop around bearishly like it did over here, that was fine. We were still weeks away from the ETF. Right? This is the 11th of December. That was a month out from the earliest approval date. It was fine for price to chop around there and show like weakness, supposed weakness. All the way back when we had these shakeouts before, same thing. Right? You set your low. Price goes down, goes below it, goes up, goes down, goes up, goes down. Oh, that's fine. We're months away at that point. 2 months away from any ETF. And the ETF is the trade. That's the trade. That's what the market's focused on. Right now, though, we're in the final, we're in the home straight. And Bitcoin needs to go up. And go up pretty rapidly at this point. And I think it will. And I think probably by the close of today, we test 44. That's what price action is telling me here. This is now just squeezing and compressing up at these highs. And I think it's going to pop up to here. And I think tomorrow we get the approvals. So you might get a quick flush and then you get the approvals. I think the approvals come tomorrow in terms of the language. They won't officially be approved till Monday. But from everything I'm seeing, there's going to be some type of communication given out that basically says you're going to get approved. And I talked about this last week, and I talked about it most of this week as well, if you remember, that they're going to notify ahead of time. And one of the reports I saw earlier, I think I shared it in Trading Analysis, is that they could start trading as early as next week. Now, I don't know if that's true or false, but that's interesting. And I want you to just go back and read all this from yesterday as it was happening. So there. So read from there, if you haven't already read, about all the madness. This is from the very first sell-off at 44 and a half. And then I was fucking traveling and I was like trying to live post without trying to keep track, flicking over to Bybit, flicking back to trading or Real World app. But I was trying as best I could to give a live commentary in real time because I know that's when people's emotions are at their heightened. So read through it. Think of the emotions you felt. Think of how the market looked. Go back and look at the charts and internalize it. This is going to happen a lot in a bull market. This is what we do. You have to understand the shakeouts are necessary. I don't think, first of all, people have enough conviction in Bitcoin. Bitcoin's going to 6 figures plus. It's inevitable. It's better than gold in every single way. And over time, more and more people will come to realize that. Many already do. To just reach gold's market cap of 10 trillion, that will put Bitcoin at half a million, per coin, 500k. So 100k is nothing. It's a penalty cake. It's only just over, it's 2.2x from here. But you have to understand that it has to feel scary to make people panic and sell. There's going to be so much engineered FUD, and all it is FUD. Everything below all-time high, everything below all-time high is a bear trap, not a bull trap. It's a bear trap to shake you out, to get you to go short, to get you to sell, whatever. It's going to drop down, oh, it looks so bad, and then boom, away it fucking goes again for its next leg, because it's inevitable. It's going to happen. That's the approach you need to have. That's the mindset you need to have. And the reason that you have to have that mindset is because otherwise you can't play the game. Right? It doesn't mean that you do stupid things like buy in at the top. It doesn't mean that pullbacks can't happen. It doesn't mean that you apply leverage and throw all risk management out the window. But what it does mean is that you don't panic in the short term whenever the big picture is still the same. Don't forget that. There's a limited supply of Bitcoin. There is a high demand for Bitcoin. The new supply issuance is going to be halved in April. There are ETFs coming that will bring demand for Bitcoin. How much demand? Was there going to be much demand? Fucking nothing burger. It's all people trying to convince themselves to sell and go short. What if there's not significant inflows? The ETF doesn't fucking matter. It's just a narrative. Idiots. So many bad takes online. It doesn't matter. Right? Obviously, the ETFs are a good thing for our bags because it means more people coming in, they buy more Bitcoin, and then it goes up. Even if there is underwhelming demand, doesn't mean shit. Bitcoin doesn't need ETFs. It's not about that. It's about the real physical Bitcoins, the actual Bitcoin. There are not enough of them in the world, on the planet. There never will be, for everyone who wants them. And that demand will only grow over time. If people are waiting to buy ETFs, they obviously don't understand the mission anyway. And they're not going to hold it to 500k. Because if they had that kind of conviction, they would buy spot. So yeah, it's good. Bit more demand. Great. But as soon as the ETF hype dies down and we have a sell-off, and we will, there'll be some kind of sell-off, and people start saying, oh, the ETF's been disappointing. As soon as I hear that, fucking all in. Double down. Fucking long your longs. Because it's the stupidest FUD. Oh no, the ETF doesn't fucking matter. Good or bad, that only counts temporarily, right? So short term, of course it matters. Buy the rumor, sell the news, blah, blah, blah. Short term for trading, it matters. But remember your big picture. And so since the bounce, since the dip and the bounce, that's Bitcoin. That's ETH, weaker. That's Solana, better than ETH, weaker than Bitcoin. And, we need to see what happens from here, really. These shakeouts, usually, you want to give them a few days. It rarely moons straight after, right? What I would expect is that if Bitcoin gets the early approval signs tomorrow, that Bitcoin has a big run back up towards 45, 46. Alts move up, like say Solana would move up into this gap, but then have another pullback. And then it starts to climb and go. You don't just get these kind of really quick V reversals anymore. It just doesn't tend to happen. Even here, right? We had a shakeout, rallied up, pulled back, and away it goes. Retests are coming for sure, and usually the wick can go right down quite deep into the other wick. Can go searching, go testing. So don't get shaken out on that either. But yeah, Bitcoin's stronger, which is good. Total 3 is now setting up what I think will be multi-week accumulation, where it'll move up, it'll move back down, it'll move up, down, and then go again. I think something like that, where it gets choppy, right? People start to get excited about alts again, get bearish on alts again, excited about alts again, start to have a little bit of disbelief and panic, and then away we go. That would be my base case for alts. And then looking at the sectors, what bounced back best, right? So this is AI as a whole. Render, I think pretty good. You know, obviously massive deep wick indicates a lot of people waiting to get out, wanting to exit, and not a lot of support within this area. So it probably drifts back down to see where the real support is. And for that, you know, for like render, for example, you want to find your higher time frame long-term support and resistance, which I think is KuCoin has the full chart. You know, you need to find your high time frame levels anywhere that has, you know, some decent history, price history. Like you could say this level could be one, right? It was a previous weekly high. We capped the market, we pushed up through it, rejected, flipped back above it. If that holds, could that be the level? Once you go below there, there's not a whole lot really. The next monthly close, like monthly open, monthly close, like renders 350 is below that, but that wick took us all the way down to there, right? So to come back so deep into that previous monthly support and bounce back up, I mean, it leaves render in a tricky situation here. You've got really clear signs of a top in terms of technically, and you've had an extended run up. I mean, look at that, it's fucking just vertical. But if it was over, I don't think you would have seen this bounce, right? If it was over, I don't think you would have seen so much demand. I think it would have closed somewhere down there, closed there, or even closed at the lows. So I think something like render can end up, you know, retracing back down into it, and then just having lots of chop around here, and then I'm talking weeks. Like render's not going to make new highs for probably weeks, in my opinion. Right, it's in a downtrend. Okay, so if you take away, you know, you have a high, you have a low, you have a lower high, you have a big lower low on the wick, and even at the closes. And so it can either go up, down again, up, whatever, but you're waiting for that trend to break and it start to go up again, right? It is in a downtrend. This was all an uptrend. This is now an early downtrend. So you have to wait for that to shift. That can only shift above here if it's going to rally straight up, which I don't think it will. So therefore you wait for another lower high, you wait for it to come down into a low, and to stop going down and start going sideways. And then you look at it when it's back over there. So you have to just give ones like that, you have to give them time. Bit tensor, weak, fetch, pretty weak, right? Like fetch, technically, really nice, swept out all that liquidity, retested the support previous SR. But again, people aping into this if it's going to go to new highs, I don't know. I would be more inclined to just say, cool, if fetch can flip, if fetch can hold this 58 level, that's really good. But that could mean that bleeds all the way back down, right? It just has to rebuild from there. I mean, that's going to be massive. That would be such a bullish sign. I think what people are kind of missing here is, and I'll show it with fetch and then I'll finish there. I think what's really being missed is what happens at these tops, right? So when fetch last topped out and had a full retrace, it had like a blow off top and then nothing. No real bounce, Sell-offs, no wicks, right? No demand, just weak. So far, it hasn't really had a blow-off top, right? Because it pushed up into one, then it consolidated. It's kind of a distribution rounded top. But then on the sell-off, there's a massive wick. So there's still a lot of demand there. When you see these long wicks, it's a sign of demand, very obviously. But also, the price should hold those levels. The problem people make is, and this is why the wicks fill in, the problem people think is, this is 100% bullish, just get long here, it can't go lower, it's going to be reverse. No, it'll probably push up and down and up and down and up and just chop. But that's so bullish. Zoom out. Fetch is building a base below all-time highs for a run to new all-time highs. That's what matters on Fetch. But you have to give it time, right? Give it a few more days or even a couple of weeks. Whereas your different phases, like this is the way Fetch could turn out if it's going to go all the way back down. This is what you're looking for, right? And so far, some examples, I mean, we don't have any examples here of strong demand being shown, right? Any of the selling days, they closed at their lows. There was no long wicks, there was no sign of demand, right? By the time the first wick came in, it had already broken structure badly. And then it continued, right? This is what's important about today. It continued the next day. And then 2 or 3 days, like 5, 6 days out of 7, red. And by that point, structure's totally broken. You get a really nice complacency bounce, but that's just a perfect selling opportunity to get out. Same over here, right? If it's what we're looking at here is it going to fully retrace? Low off top, immediate rejection, lower high bounce, and away we go. It's not done any of that. This was a potential blow off top. It didn't just retrace, it went higher, and then it held, and then it tried to sell off, and it's got demand. This is bullish. This is bullish. But be mindful that the trading market, right? Fetch might not break out until March, which I suspect, because I have an inkling to believe that March is going to be ChatGPT 5 product release. So there's probably going to be a lot of hype around then, right? And so Fetch can easily cook people and look bullish and look bearish and sweep the low and look bullish and false breakout and then boom. You can be sure that Fetch will be at all-time highs or pushing to all-time highs around the time of ChatGPT 5. That's the most logical, the most obvious. And all indications are that it's either March or Q4. And I think if it's March, I think that's when AI will be going parabolic. And if it's not March, if it's not until March for AI, then between now and then, it's going to be messy, choppy, consolidation, looking like shit. If you're too zoomed in, it's going to look like it's over. Then it's going to look like it's back. Then it's going to look like it's over again. It's going to look like it's back, just like it did over here. Right? If you were watching this too zoomed in, what the fuck would you think about Fetch? Right over here, you'd be like, oh, look at this, super bullish. Look at this, super bullish. Pennant, triangle, whatever. Super bullish for Fetch. Oh no, bearish. Lower low, bearish. Rejection, bearish. Right? And then of course, it gets even more bearish. What happens then? Boom, away it goes. So, zoom out, drown out the noise, and remember that. Keep your eyes peeled on all these different, whatever sectors you're playing and sectors you're looking at. To me, this tells me that AI is still hot and potentially going to run again. Depending though. It's not market wide. AKT looks amazing and I'll look at that in trade of the day. But like here was a big shakeout in February 2021 for Fetch. Big wick down below. So what it did was the exact same thing. There was a previous consolidation lows, pushed up, swept it out, consolidate, boom, look at all that came after. Previous consolidation lows, went higher, swept it out. So a Fetch, again, same thing. Is it going to run from here? It could. It's got the fuel. Depends on the market, right? So, that's it, GN. I'll see you all on the live stream later, 5 p.m. UTC. We'll talk a little bit about 2024, GN.